Accruals, the absolute worst, the silent killer of joy, the reason why you can have $1 million in the bank and still be technically broke, or be drowning in debt but look like a hero on paper. Pour yourself something strong. We need to talk about why accountants insist on recording things that technically haven't happened yet. If you're a normal human being, you operate on a simple premise. It's not real until the cash moves. If I buy a yacht today, but don't pay for it until next month, my bank account says I'm still rich today. That feels right, doesn't it? I have the boat and the money. Life is good. But then comes the accountant who looks at your shiny new boat and says, "Actually, you spent that money already." And you scream, "No, I didn't. Look at my banking app. The numbers are right there." Accruals force you to record expenses when you haven't paid a dime and record income when you haven't received a cent. It's annoying, it's counterintuitive, and it feels like a conspiracy to make your profits look worse than they feel. It makes you want to fire the entire finance department and run the company using a shoebox full of receipts. Let's forget the ledger for a second. Imagine you go out for a quiet drink on Friday night. You walk into the bar, you open a tab. You proceed to order 3 rounds of top-shelf scotch, a bottle of champagne for a table of strangers, and a platter of nachos you won't remember eating. You have a fantastic time. At 2 a.m., you stumble home. You haven't paid a single dollar yet because you left your credit card behind the bar. Now, here is the question. When did you become poor? Scenario A, cash basis. You think, "I didn't pay anything tonight. My wallet is full. I am a financial genius." You wake up Saturday morning thinking you are rich. This is delusional. Scenario B, accruals basis. You wake up Saturday with a headache, realizing that even though the money hasn't left your account yet, the damage is done. You drank the scotch, you ate the nachos. The economic reality is that you are now poor regardless of when the bartender actually runs your card. Accruals are just the financial hangover. It's the universe acknowledging that you drank the wine, even if the bill doesn't arrive until next week. Now, back to the boardroom. The over-caffeinated lawyers at International Accounting Standards Board came up with the matching principle. Here's the logic. You must match the expense to the period it helped you generate revenue, not when the cash actually moves. If we didn't use accruals, CEOs would lie constantly. Here is how I would cheat without accruals. I would hire an army of staff in December to build products. I would tell them, "I will pay you in January." My December report would show 0 wage costs and massive profits. I get a huge bonus. In January, the company collapses because we can't pay the wages. Accruals prevent this fraud. Accrued expenses. We record the wages in December when the work was done, even if we pay in January. We create a liability to show we owe money. Accrued income. If we shipped the goods in December but the client pays in February, we record the sale in December. We did the work, we deserve the credit now. Accruals strip away the timing of cash flow to reveal the true performance of the business. It stops me from manipulating profit just by delaying a check or hiding an invoice in my desk drawer. Here is the truth that will save your career. Profit is an opinion. Cash is a fact. Don't be the manager who thinks they have budget left just because finance hasn't processed the invoice yet. That's how you get fired.